Morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call, 1st of May, 2026. Happy Friday, everyone. Nothing but good news. Stocks finished the month at record highs. April was the best month in since 2020. So we're looking at, like COVID bounce sort of stuff here. Looking at, I think the S&P 500 added $8.1 trillion over the course of 23 trading days. And look, obviously you can see it here in the Mag 7. Obviously we've had some decent earnings so far, particularly in that finance sector, etc. Google's up extraordinary amount. Probably in the vicinity of nearly 40% there now. This is all despite the stuff that's bubbling in the background. Tip of that for those of you who are still fully invested, tip of the hat to President Trump, because essentially he's done a very good job managing the media through this whole crisis, because we do have oil back at it was a crazy day in oil yesterday. Brent spiked to $126. Highest since 2022, on an Axios report that Trump was getting a strike briefing, and then it reversed pretty hard, about $10. So, but we are still sitting at really high levels in crude overall. I think you've still definitely got WTI around about that sort of 104 mark or 103 mark, and we had some GDP numbers overnight as well. So basically GDP was 2% annualized, up from 0.5 in Q4. Business investment surged, and it's all AI CapEx that's driving it, essentially. That's what's carrying the entire economy overall. And headline PCE inflation hit 3.5% year on year. It's highest since May 2023. There's AI is doing well, and the middle class is essentially not doing well. And I would imagine if AI genuinely starts monetizing and takes off, the middle class and the lower class are going to do even worse. But as it stands at the moment, they are, these biggest companies in the world are hiding what's largely, what is largely a very concentrated economy and a concentrated stock market. So I just split the mega caps off here this morning. Meta was down 8.5. Microsoft was down about 4. Google was up 10. Amazon and then there's Broadcom. Walmart manages to squeeze in there as well. So it's not necessarily the Mag 7. This is as they're calling it, the 490. Or you could maybe say the haves and the have-nots overall. So. You had Meta being criticized. Microsoft was a bit meh, but Google's just really, really separating itself from everyone here at the moment. They were a little bit slow to start. They had a couple of major screw-ups at this, when they were launching some of their AI, and probably went a little bit too early. But I think just their broad-based innovation within their company and the investments they've made, in emerging technologies, etc., probably really set them up in the long run. So we did have Apple earnings today as well. It was a bit meh as well. Essentially, we had record 111 billion revenue. iPhone up 21.7%. Shares dipped 0.7. They're realistically it was bang on expectations. So, but you would kind of expect that with Tim Cook stepping aside, new CEO coming in, who is like Apple old school anyway. So nothing much is going to change. But they had some growth in China overall. The Aussie market not doing particularly well this week. Probably we're a bit more pessimistic of a people, I suppose, or compared to the US anyway. And we're obviously a fair bit more dominated in terms of, oil and, cyclicals overall. So, but one really interesting thing is I go back to this slide here, Exxon and Chevron are down on the month. Now, look, I know they rallied up a little bit at the start there when but we're talking about companies with fortress balance sheets and oil prices still I mean, WTI is at 106 here at the moment. How are these guys not making an absolute just crap ton of money? And we will have, I do believe Exxon's reporting earnings tonight, and Chevron actually. So they'll be before the bell, but yeah, you can't tell me that those guys aren't going to have an extraordinary report. I mean, the lowest price we've seen realistically since the start of the war has been about 83, and it was there for about a day. So I can't imagine, and they've also got that Venezuelan oil. They would have got that at way cheap as well. Chevron particularly has those 3 plants in the Gulf of Mexico that can actually process that heavy molasses-like crude from Venezuela. They did take something like 50 million barrels over there. So so crude did pull back, but still up around about 12% for the week, because it was a very risk-on attitude. We obviously had, and apparently now gold, silver, platinum are all risk-on. So we had those guys up 2, 3, and what's that, 6%. So yeah, so everything's kind of getting more expensive. And when you got gas prices as well, heading up to really heading a hell of a lot higher to an average of about nearly sort of $4.50 a gallon, which basically that was $5 was the high in the US in back around about 2022 when we had like super high inflation, and coming out of the Ukraine thing. But many analysts are calling this worse than the 70s, worse than Ukraine in terms of the effect of oil. But Trump's managed the media like an absolute master. So but today is a very important day because it's day 60, and what day 60 is the War Powers Act deadline. So 1973 War Powers Resolution. So Trump could act as he pleased as the president and using the executive power for up to 60 days before Congress has got to essentially approve it. Today, he was legally required to withdraw US forces or obtain congressional authorization. So nothing's happened. Pete Hegseth's arguing the ceasefire has paused the clock, which is being legally disputed. So, I mean, good time to be a top of the line lawyer and a Supreme Court lawyer over there at the moment, because they're just continually just contesting Trump's executive powers. Like, those guys would be getting paid a fortune. But the Democrats are preparing a lawsuit. There's then the Republicans are drafting a retrospective authorization for the war. The Republican leadership is not moved to authorize or stop it. So we're just in this massive grey zone. So that was from Al Jazeera. Strangely enough, US media not reporting on it. So yeah, President Trump was too busy in his press conference this morning talking about how he's removed tariffs, out of respect to King Charles. He's removed tariff restrictions between Scotland and the US and Kentucky for 10% to improve whiskey trade. I'm sure that's a massive part of their economy. And then he talked about Live Golf, and so. Really, the guy's running out of material here, like in terms of distraction. I would imagine, we've got payrolls next Friday. Whether those numbers come through, poorly or whatever, but I would imagine the economic numbers from next month onwards, where we've seen this spike in oil prices higher again, is going to start to weigh on the market overall. We're not going to have earnings to save it. In other news, outside, central banks, all 5 held: BOJ, ECB, Bank of England, Bank of Canada, FOMC, all stood pat. Warsh expected to be confirmed on the 11th of May. ECB said a June rate hike is firmly on the table if inflation persists, which oil prices aren't down, so I guess that's probably on the cards as well. The Bank of Japan has also intervened in the yen. Its first intervention in 2 years. Basically, the yen surged 2.5% against the US dollar. Best day since 2022. Dragged the dollar index down 1%. which obviously would have helped those, gold and silver, etc. as well. And then, and basically, does the US Treasury join in, which would be a game changer? That's the question people are asking. 10-year JGB bond yields are the highest since 1997, so nearly 30 years. They're about 2.5%. And yeah, so there's a fair bit going on, basically. Apparently the rules and laws don't apply anymore. Apparently, the fact that the consumer is getting absolutely smoked by by gasoline prices, etc., and the economy is kind of slowing is not really relevant. But overall, it's we finished at records. It's an amazing run. The US stock market to add 8.1 trillion is in a month, in 23 trading days. It's bulletproof. But essentially we do think here at MPC that we're going to get, a lot of these overvaluations and a lot of the, these issues are going to probably start to weigh on the market. The whole sell in May thing. There are a few people contesting the sell in May theory, saying, they're basically backing the fact that Trump's so bullish for markets that, there'll be an exception to the rule this time. I'd rather stick with the historicals, at this stage. I don't, there's only so many things, where like we already had stress in the consumer credit market and things like that. Like once people start to run out of money, someone's got to start buying this AI and monetizing. They've spent a lot of money on CapEx, and we've had one of the Mag 7 actually do well, which was Google, and deservedly so. And I would imagine they will, they are at top of the list for buying, individual stocks. When you're buying the dip, it's been my favorite with Tesla for a long time. But I think that, you can't ignore the macro forever. You can't ignore high bond yields forever. You can't ignore high oil prices forever and high valuations. So I think at some stage we're probably going to have, and running into this uncertainty into the midterm election, we're going to have some form of dip in the next 6 months. We've formulated a strategy called Buy the Dip in the S&P 500 index, which basically gives you your entry price as the lowest Monday settlement between the middle of May and the middle of October, and then you've got the rest of Trump's turn to ride that out at 6-to-1 leverage. So, it's a strategy we've really, we've customized around what we think is going to, essentially happen over the course of the next couple of years. It's a great capital efficient way to be in the effectively like the S&P ETFs, where you're effectively saving around about 80% or plus of your capital allocation. You can go and put those in something else. So, catch the guys on Bulls versus Bears this afternoon, the podcast. Jonathan, Kai, and Finn this afternoon. I'll be I'm heading off. I've got other duties, but it'll be a good episode. And go and have a look at last week's tinfoil hat episode. Got some pretty good feedback with pretty funny some conspiracy theories around Trump. But Aussie stock market, ASX 200 up like 150 points, up 1.5% plus. So should be a good end or a good start to the month for us, but a good end to the week. And we have been a little bit dour, so be hopefully a little bit more positivity around today's Australian market. So for those of you who watch AusBiz, I'll be on the call today, and you'll be able to catch the investment committee on Monday as well, which we're recording today. So have a great day, guys, and we will speak again on Monday.
Feeling lost with investing? Meet Mosaic. Mosaic is MPC Markets' platform that turns confusing markets into clear, actionable guidance for your portfolio. Discover Mosaic today. Portfolio and trade ideas in one place for clients and subscribers, powered by MPC Markets.